Welcome to Entertainment, the channel with the most deceptive name in all of YouTube. And check out my merch if you're interested. Today we'll be looking at 10 reporters who wanted to feel the power into it. Close to his full power, and this guy went flying, doing a full 360 degree to give him a chop to the chest. I'm thinking that this is not really a journalist. Ryan Garcia fights at 135 pounds, while Martin is around, and I think they planned for. Hopefully this guy is getting paid good money, because that was a pretty hard slap right to the face, and I think he was legitimately hurt by it. Just look at his hands. Kali has baseball gloves for hands. Holy crap. The UFC heavyweight freak of nature. Although ask a kick. Going to be the test subject. John was put to sleep and told them that there was no way to really feel what that goes around asking pros to do things to him. He's apparently a This is the first attempt, and it was less serious, but he decided to be thrown again. Bad decision, buddy. Had stated that Ralph had some broken ribs for his trouble, a couple of things. But this was kind of a weird interview. It's like the ones where you play around with your girlfriend and you toss her around a bit and then just feel her up. Remember? But this chokehold was the part where she was not having fun.
En dit is de backman choke. Als ik hem heel rustig aanzet, dus knijp. Gaat ie?
Good morning, good morning. Welcome everybody. This is the 20th March on a Saturday, 8:48 a.m. Eastern. Oh, just got a message from Trump. All right, perfect. Just got to make sure audio is clear. Okay, audio is clear. We have Zoom up. So we're going to be starting in about 11, 12 minutes, and then we will continue on. Mic check, mic check. 1 2 1 2. 1 2 1 2. Welcome, welcome everybody. This is the 20th March. I thank you so much for everyone for coming in here today. This is a special simulation session we're doing now. What we do is we basically do bi-weekly simulation sessions for our microfluidity groups and stuff like that. But since this is a special occasion because we hit 100,000 subscribers on YouTube, and without you guys, this wouldn't have been possible at all. At all. Would have been never been possible, right? For 4 years, we've been going strong, and right now we hit 100,000 subscribers. So this is going to be a special webinar we're doing. The way this webinar is going to be run, first of all, we're going to choose a random date, right, of the chart that we will simulate. This is going to be a live simulation done on 1 week of the market, and we will simulate gold over here. The entire strategy that we're going to use here is going to be very simple. We're going to start with high time frame. We're going to draw most recent zones on the high time frame, like we will identify those most recent zones, and then what we're going to do is we're going to identify the next zones where we think price can go, and then based on that, based on volume time, based on session time, based on candles, we'll be executing trades. We'll be talking about like maybe adding entries. We'll be talking about like risk management and stuff like that. Hi, Raja. Do you record this? Yes, Blackhawk. All webinars are recorded. For you guys especially, everything is recorded. Let me make sure it's being recorded here one more time. Okay, it's being recorded on YouTube, so it's all good. Okay, so let's get things on the road over here. I'm gonna bring my browser right here at this point, and we're gonna put in a random date generator. We're going to come over here, we go to a random date, we're going to remove this, and let's get this going now. Okay, so what we want is we want 10 dates. Oh, before we begin, whoever wants to know what this simulator is called, this simulator name, right? Let's put this in big blue letters right over here, is soft for fx.com. www.softforefx.com. Let's put this here for everybody in the gulag and everybody on Zoom who wants to get this, go get this. I don't know of any other version that's good enough. I think this is a really, really, really good simulator. I've been using this for about 4 years now. This same simulator I've been using for about 4 years, and I absolutely love it. Okay, so let me just see if it's getting adjusted there on Zoom and YouTube. All right, perfect. We're good. Awesome. Let's get these dates over here. So we're going to start with, let's start with July 2020, right? Now, the thing with simulation is you don't want to go too far back, right? Because when you go too far back, it's different market environments, different fundamental environments, right? So you got to stay very relevant. So we're going to start with July 2020, and we're going to go all the way over to, let's do 2021 right over here. Let's go to 2021 with 2021, and we're going to end till like February, right? We're running in March, we're going to end till like February over here. February 26th, July 1st, we're going to need 10 dates, and we need to see only Sundays over here. All right, let's get these Sundays here. Get dates. All right, so we got these 10 dates here. We got September, October, November, December, January, February, right? Let's do 1st November. Or actually, let's do 20th September. Oh, someone is saying November here? Okay. Let's do September here. 20th September. Because then we still have some room for price to enter into the end of the year over here. So start with 20th September. October? Okay. 11th October. Perfect. We're going to go with 11th October. So when you install the simulator, this is what you're going to see right over here. Data center, right? You're going to see the data center. You can see you have all your pairs here to the left-hand side. And then you go to gold. So we're going to update gold. Gold is going to start updating. You can see right here it's being updated right now. How long is this simulation for? Probably an hour and a half at best, I'd say. Yeah, like an hour and a half at best. Someone said 6 hours. I can go for 10 hours for you, don't worry. We got Lukey in the stream. All right. 94%. It's done. And then we need to update the date. We're going to update the date over here. Date's been updated. Close. All right. Let's start the simulation at this point. So what do we had? We had 2020. We had October. We had 11th October, right? Okay, what's that? Okay, nothing. We had 11th October. We're going to start with 11th October. We're going to choose gold. Oh, let's go back again. Let's go to 11th October. Actually, one more thing. One more thing I'm going to say. Please refrain from asking any questions unless your question is not answered. I know some people get antsy about questions. They don't want to wait for questions. They get too impatient. But just keep your questions to yourself. And I promise you, every question will be answered without you even asking that question. Right? I've been doing this for a long time and I know how it goes. So trust me, I'll answer every question without even being answered. So we're going to choose the date over here. We're going to choose our currency. We're going to choose the starting balance. We're going to choose time when starts New York close. Don't ask me why New York close. It's just how it is, you know. So leverage is going to be, we'll go with 500 leverage. Commission per lot is here. What I'm looking for is spread. Spread is going to be fixed, right? And we're going to go with the, let's go with the 1.5. Let's go with the 2 pip spread, right? So we're going to go with the 2 pip spread because it's gold. Initial history on the charts, we want to see around 150 days. How about try Asia or London or just NY? We will only be simulating New York session because I trade New York session, and for my own, like, you know, learning purposes as well, I'm going to do the New York session here. Perfect. So you're going to get this screen. After you get this screen, you can see at the bottom we have some tabs open of the charts. So we're going to close these tabs one by one, like this, like this. There we go. Tabs have been closed. And now we will load up our charts. So we're going to start with the weekly time frame. We're going to add the weekly time frame to the database. We're going to start with the daily. We're going to add it to the database. Daily. We're going to start with the 4 hour. Start with the 1 hour. We're going to go to 30-minute. And we will go to the 15-minute. I'm not going to look at the 5-minute time frame because, you know, like sometimes people get caught up in the 5-minute time frame, and so we're just going to go over the 1 hour, 30-minute, and down to the 15-minute time frame. Now we're going to load up the charts one by one. Charts are being loaded, loaded, loaded. Perfect. Now what we got to do is we got to bring up our indicators here. See, we have our EMAs here. Just joking. Imagine I start talking about EMAs and indicators. And all right, so we're going to get our naked charts over here. We're going to remove all indicators. We're going to only use candlesticks. So we're going to go to our naked template. This naked template is going to cost around $999. You can get this from forexfactory.com. Naked template. It gives you naked charts. Obviously, that was a joke, guys. Don't think that was serious. That was a joke. Someone in Gulag is saying, oh, wow, so expensive. All right. So, hello, everyone. Greetings from Switzerland. My first Zoom session. So excited to join. Oh, nice, man. Thank you. Welcome, welcome. Okay, perfect. So this is where we have a chart, right? So now let me explain a few this like how this whole interface works. So basically what you got over here is you have the time here, right? If you look at the time, you're going to see time is 100 hours. This means this is can we do fixed lots? Yes. So this means this is 6 p.m. Eastern. Very, very important stuff. If you're not going to write down stuff, you're going to forget about it, and then you're going to ask me in my DM. So let's just do this, right? This means 6 p.m. Eastern. So when we look at the charts now, see where the candle opened, right? Let's zoom in here a little bit. Let me just scale fix this on the 15-minute, scale fix this on the 1 hour. Scale fix means that on MetaTrader, then you can kind of like do this from the left-hand side, right? That's what it means. We're going to scale fix this onto the 4-hour time frame, onto the daily time frame. Oops, go to scale fix on a daily time frame. And also let's scale fix on the 15-minute and the 30-minute here. Okay, 30 minutes done. Let's scale fix this on the 15-minute right here. 15. Okay, so first thing I want to talk about is, oh, is there sound? Yes. All right, let me just mute my phone over here. So the first thing I want to talk about is gaps, right? Obviously, when we're looking at the chart right now, we see that there is some sort of a gap at this point. And the reason why gaps happen over the weekend is because, the price is moving all the time. Whether it's the weekend, whether it's a holiday, no matter what time it is, price is always moving. And the reason why price is always moving is because there are a lot of fundamentals that are affecting the price to move. So even though on the weekend, when we don't see price move, that means that the brokers are closed at that time because brokers need to grab price from the market and then they display their price to us, right? In the market, price is already moving. But once the market opens, the broker gets the first best price. So look at this, right? So market closed at 1929 and then we opened down at 1928.98, whatever the price is, right? So this means that over the weekend price moved or fluctuated by like, 0.7 pips, 1 pips, 2 pips, that way. Please change the color of the candles. I don't know what color else to go to. I think these are pretty good candles. What you can do is you can maybe what you can do is you can change the colors from or maybe you can change the resolution. Yeah, maybe that's something that you can do. Maybe change the resolution. Okay, so let's go ahead. So the plan here is going to be, so let me lay out a plan here for everybody. This is the plan for today. Trade plan. The trade plan for today is going to be from 6 a.m. till 10 a.m. Eastern. This is the simulation that we're going to do over here. Trade plan, that's how trade plan is going to be, and we will focus on high time frame breakdown to lower time frame. This is the plan for today, right? Let me just make this a little bit smaller and let's continue on over here. Okay, so let's put this right over here. And what else we need some chart studies. So we're going to go to toolbars. We're going to get our line studies. There we go. We're going to go to toolbars and we need our charts right here. Perfect. Everything's good. Okay, awesome. So let's move on to our trading session here. Trading session is going to be, so I'm going to hit next bar, and you can see here it says weekly, right? If I hit next bar, it's going to forward the whole chart by 1 week. So we don't want that. What we want to see is 1 hour. So we're going to forward it. We're going to forward it again. Let's go to the 1 hour chart. We're going to forward it to, let's go towards, so you can see the time here changing, right? This is pre-London. This is London Open, 1000 hours, right? 1000 hours is London Open, 3 a.m., 4, 5, 6. This is 6 a.m. Eastern. This is the point when you're normally coming through the charts and you're like identifying that, okay, what can we do at this point? What kind of a trade are we going to take? So what we're going to do at this point is we will break down the high time frame all the way down to the lower time frame. That's what we're going to do at this point. So looking at gold at this point on the weekly time frame, the first thing we can identify is that maybe weekly is rejecting this area because the previous weekly candle closed with no wick on the top, and we know whenever a candle closes with no wick on the top, that means there's no range. So we may be rejecting from this point to continue down towards 1860 or whatever on the weekly time frame. So let's take a look at that on the daily time frame now. So looking at the daily time frame, we have almost like the same resistance area right over here, right? Daily candle came up, but at the same time, daily candle broke this resistance here as well. So we're not sure whether this candle will do a retracement to continue bullish or what's really happening at this point. So let's take a look at the 4-hour time frame here. So looking on the 4-hour, we're actually consolidating right here, right? So if we zoom in, what we're going to notice here on the 4-hour time frame is going to be some sort of a resistance forming right over here at this point, right? We have resistance forming right here. At the same time, it seems like we're rejecting this area from the bottom as well, right? So at this point, what's the bias? We need to identify the bias. The bias is bullish, right? But currently what's happening is it may seem that there may be some sort of a retracement happening here for price to continue moving bullish. Now, if you're looking for a good buy is probably going to be above 1929. But if we measure this range, this is a 113 pip range at this point. Let's take a look on the 1-hour time frame. Let's see what more information we can find. Now, looking at the 1 hour time frame, what we can identify here is that we are basically creating a resistance at this point right here. There was now when we look at this current candle has a big wick at the bottom. So whenever a candle has a wick at the bottom, you want to take a look at left to see what's going on. So maybe to the left hand side, we had some sort of a support here previously, right? Because if we had support here on the left hand side, this means there may be some sort of a probability for price to kind of like, maybe come down to fill this wick, or maybe to like, maybe this whole thing is like a rejection for price to continue moving back up. So that's something we got to identify at this point. So let's take a look on the 30-minute time frame. So 30-minute candles are also rejecting the support, right? We're rejecting the support right over here. So yeah, I think the only thing we can take a look at, or we can take away from this area, is that maybe if we can break above the 30-minute high, we can probably come up in this range. And this is a pretty nice range here, right? So if you measure this range, right? So we have resistance at this point. If we measure the range from 1919 all the way down towards, 1925, this is a 68 pip range, right? It's a pretty big, actually 68 pip range, 6 pip range, 26 to 20. Yeah, it's a pretty big range, 69 pip range over here. So let's take a look here. So what we need is we need a candle to kind of like break above this area to continue moving bullish. Let's take a look on the 15-minute time frame here as well. Let's clone this over to the 15-minute time frame. Looking at the 15-minute, yeah, we have some minor resistances here to the left-hand side. So let's just wait to see how this 30-minute candle closes and forms, and then we can basically try to see if we can take a buy above this wick. Now, before taking an impulse entry above this wick, we need a candle to kind of like, create a bottom wick and then continue moving up. That's what we're going to see. But also, since we have this support forming at this point, if we break this support, there's a high probability for price to continue down into the next support, which is right down over here, around 1912. That's what we're going to wait for at this point. So we can see how the candle is forming. Let's speed it up here a little bit. This is 6 a.m. Eastern. And let's see where we can go from here. Looking at the 1 hour time frame here again, we have 2 minutes past, 3 minutes past. The idea for an impulse entry is to maybe in the second half of the 30-minute candle, we can see we're not breaking the high at this point. The 1 hour candle is also bearish. For an impulse entry to really work on the 30-minute time frame, we want this 1 hour candle to break above the high of the previous 1 hour candle to have a better confirmation to continue moving up, because the previous 1 hour candle is bearish at this point, right? So we got to wait. We have a support, we have these candles forming here, so we have to wait at this point. The 4 hour candles are ranging, so we're just waiting to see if we're going to break above to continue moving up or not. Because a break above the 30-minute, it doesn't really matter, because the overall higher time frame 1 hour is still bearish. And obviously, like, overall at the same time, we're pretty bullish at this point, so we're only looking for buys here today. So we should have to wait. We have the 30-minute candle closing in about 5 simulation minutes. There we go. 30-minute candle has closed. If you look at that 30-minute candle, it looks like it closed bullish, right? Looks like the 30-minute candle closed bullish. Now, if we look at this scenario, right, and if we try to be fluid over here, what can we do here, right? What do we see at this point? So we see a low being formed right here, right? We see a low being formed. Price came down, made a low. Price is coming up. Now, if the full candle respects the 1 hour high, right over here, right? If this candle respects the high of the previous 1 hour candle, and if it breaks the low of the previous 30-minute candle, don't you guys think this is a very good opportunity for price to continue down in this market structure and have the overall 1 hour possible fill this wick over here? I think this is a pretty good opportunity for that. 32 pips, 33 pips, I think it's awesome. Right? So this is where we're breaking down the 1 hour wick fill down to the structure on the 30-minute time frame. Very, very important concept, right? If this 1 hour will fill the wick, we need the 30-minute to break the structure of the previous 30 minutes. So that's what we're going to do, right? Let's take a look on the 15-minute time frame here. Let's see what's going on. I know our bias was buys, but this opportunity is just showing up over here, so we got to Yeah, okay, 15 minutes also kind of like doing the same thing. So what we're going to do is we'll basically enter a sell once this 30-minute candle breaks the low. We'll keep the stop above the candle and we'll anticipate price to continue down to fill the wick. We had a request to use static lot sizes. So what we're going to do is we're going to use a $2 lot size, right? We're going to use a $2 lot size, and our risk is going to be around 1%, around 2%. Yeah, let's do like $1 lot size. Yeah, we'll do $1 lot size. So we're going to see what happens over here. If it breaks the low, perfect. If it doesn't break the low, then that's still okay. Oh, we broke the low at this point, and I guess we missed the trade, right? Because I think it was way too fast at this point. So we missed this trade. So even though we broke the low over here, now this is a very good opportunity for price to continue down to retest this low. It's super sad we missed it because, you know, there was a very, very good entry for price to continue down. Here we used a sell stop, to be honest. What happened to the bullish bias? Man, some people are just I think Gulag is is pretty slow in thinking at sometimes. Use the three dots next to the pause button. Oh, okay. Yeah, it moves pretty fast at this point. So now there's a very good probability for it to continue down to fill this wick. It's just super. Actually, can we still get it in? Let's take a look on the 15-minute time frame. Yeah, I think we still have the opportunity right here. If we have a stop above this area and have a stop down over here, I think it's still going to work. So it's going to be like around. Let's do this, right? So this is a 1-to-1 risk reward because it's retracing. And if you do think we're going to continue down, I think this is going to be a pretty good opportunity for price to continue bearish at this point. Right? We broke the low. Our low inside is right over here. So I think this could be a very, very good entry for price to continue bearish. We have the last 15-minute candle starting at this point. You can see this is the last 15-minute candle of this 1 hour. And we are coming down over here. And we're going to see how this candle is going to close. We want the 15-minute candle to stay below the entry. Let's see how this candle closes. We're moving. And there we go. Candle has closed. If we look on the 1 hour time frame, we can see the candle has closed with no wick at this point, right? Even though when the candle has closed with no wick at this point, I think this is going to be a very good opportunity for us to close the trade. So what I'm going to do is, so right now, so far, we're about 14 pips in profit. So I'm going to close partial positions. I'm going to close 90% over here. And I'm going to put stop loss at break even, right? The only reason why I'm doing that is because the candle closed with no wick at the bottom. Whenever candle closes with no wick at the bottom, this means there's a 50-50 chance that price will either go down or it's going to go up. Right? Whenever there's a 50-50 chance in life, you don't take those chances. We only take chances which are higher in our favor. And also we're at support at this point. So, you know, who knows where price is going to go at this point. So we have to be very careful about this. How would you manage risk on this trade? Already managed risk. Oh, look at that. We broke below the low. So I think at this point, maybe you want to close another partial position. Close another 50% right over here. And put stops at break even. Okay, perfect. So we're up about 3% here with this trade. One trade used one lot on a $5,000 account. We're up about $140, $150, so it's pretty good, right? We're at support, so we got to be very careful about the support. Look at this on the 4 hour here as well. We tapped into the same area we tapped into before. Let's take a look at news. Do we have any news here? We have no news coming up here today. Press the 3-dot button and have the program stop for you at a certain price, certain point you choose. Oh, okay, hold on. So we can use this. Pause the simulation automatically on reaching price. Oh, okay, perfect. Perfect, I understand this. I've never used that before, so I didn't know. Okay, so let's take a look on the 1 hour here. So 1 hour is obviously rejecting this area. Looking at the 4 hour time frame, we're also rejecting that area. Looking at the 30-minute time frame, we're coming up to this minor resistance right over here. Minor resistance right over here. If we measure this range, This is a 30 pip range over here. So we're going to see if we can maybe execute a trade as we break above this minor resistance. But first, what we want to do is we want to look at the 15-minute time frame, the lower time frame, to see if that range even makes sense, right? So if we're looking at the 15-minute time frame, what I can see is that maybe there's an opportunity to break above this area to continue in this clean range. The only reason why I'm thinking like that is because if you look to the left hand side, we have this clean candles here to the left hand side, right? We have a resistance right over here. This is a dirty range because look, price is just ranging at this point right here, right? If we break above 1923, I think there's a very high probability for price to continue up towards 1926, 1926.57, right? Because you got clean candles here to the left hand side. But we need confirmations for that, you know. A good confirmation is going to be maybe a candle closing above 1923 or maybe a candle breaking above, you know, 1923.81 for price to continue up. That's what we're going to take a look at that over here. Oh, wow, look at that. So this is NYO. So if we look on the time, looking at the time is really important, guys. So this candle is breaking above the high at this point, right? But if we look at the time, we're approaching NY open at this time. So now the question is, do we want to wait for NY open or do we want to just enter before the NY open starts? Because if we break above 1923.78, I think there's going to be a very high probability for the volume before NY open and during NY open to continue moving price up towards, you know, 1926. So that's something we'll have to be very, very careful about. So I think we'll wait for NY open at this time. We got about 10 minutes left. We already took one trade. Always remember, we already took one trade. So there's no reason to take another trade, but we're going to see how this candle closes before NY open. Oh, wow, look at that thing pushing over here. Okay, perfect. So we're breaking above this area. What we would need to see is we would need to see probably a retracement down and then a continuation up towards 1926. So that's what we want to see at this point. Maybe a retracement and then a continuation up towards, you know, 1926. Let's see if we get that or not. So this candle needs to retrace and then we're going to enter buys for price to continue up. But, you know, like if it doesn't really retrace and goes up, then it is what it is. And then at that point, we're going to move on to the next session. If you click sessions, you will see session timings. Yes, we know. Look at that. We're moving into New York Open at this point. Okay, so since this is moving up to where we said it would, I think now we've basically, if we've missed this trade, what we can do at this point is we can go back and we can see that, okay, where could we have entered? So I think now looking at it in hindsight, this is really important, right? Maybe we could have really entered around 1923, having the stops below the 15-minute candle and anticipating price to move up towards, you know, that area right there. I think that would have been a pretty good move. Someone is asking why not impulse buys. I'm not sure if you are late here or what's going on, but we actually addressed that situation earlier on. Okay, so let's move on to the next session here. So we took one trade. We're up 2.8% for the day. We only took one trade, right? So let's move on to the next session at this point. Oh, wow, look at that. Look at that range over here now. Okay. So we're going to forward. Look at the way gold is ranging at this point now, right? Look at this. Look at the way it's ranging. After we had a good move in New York Open, and now we're just ranging here because there's no volume at this time. Look at that range. Do you have any news? Okay, so let's move on to the, so this is London Open at this time. Look at the time here to the left-hand side. 10:00 hours, London Open. London Open, this is 4 a.m., 5 a.m., 6 a.m. This is 6 a.m. Eastern, Tuesday, 13th October. So let's move on to the weekly time frame. Let's see what's going on. Weekly candle is still rejecting that area. If you guys remember, we had the weekly over there. Let's take a look on the daily time frame. Daily candles, oh wow, look at that. This daily candle basically rejected the support from the left hand side, and now this new daily candle is basically tapping into the same resistance that was formed earlier at 1911. So let's take a look on the 4-hour time frame. Let's see what's happening. So let's remove all analysis here on the 4-hour time frame, because since we had analysis from the previous day, we're going to remove our analysis here on the new day. I always make it a habit. My habit is to remove all analysis and to do the analysis again. This is my biggest habit, which I'm very, very proud of, right? So it seems like what happened is that maybe 4-hour look. So look, okay, let's tell a story by looking at these candles. So basically what happened is we had a resistance here previously, right? We had another rejection over here. Moving on, we had candle break this area, and then we had another rejection. We had another rejection over here. And it seems like these candles, they did a fake out and then came back in the range to maybe continue going up, right? If it's going to continue moving up, maybe this candle is doing a retest to go up, but we're not sure. It may be very well be ranging on the 1-hour time frame. Let's take a look on the 1-hour time frame at this point. So 1-hour time frame is a total mess over here. So since 1-hour time frame is a mess, we're going to remove all analysis once again on the 1-hour time frame. Let's do this, remove all analysis. Now let's do some fresh analysis on the 1-hour time frame. So first thing, the very first thing we see on the 1 hour is that we have a support being formed right over here, right? We have a support being formed on the 1-hour time frame. The second thing we can identify is that there's a resistance being formed on the 1 hour around 1923. So now we got to do is we got to take a look at that information on the 30-minute time frame, and let's see what more information we can find. So looking on the 30-minute time frame, oh, look at that. We have a lot more zones on the 30-minute time frame. So let's remove this. Let's remove this blue line. All right, perfect. So first thing we see on the 30-minute is a resistance formed. And the second thing we see on the 30-minute is a support formed down over here. But at the same time, we also have some sort of a support forming down at 1914 here as well. Because look how price moved up, right? Whenever price moves up, look to see where was the last support formed. Very important. Whenever price moves bullish, look to see where was the last support formed. So price moved bullish, we go down, we go down, we go down, down, baby. Right? That song, right? So this is where this is where the support was formed right over here. Candle moved up, bearish candle formed, bullish candle formed, boom, support formed at this point. So this is now a range we have at this point. Let's take a look at this information on the 15-minute time frame. So actually, let's just clone these 30-minute zones over to the 15-minute time frame, and then we're going to take a look at that, how that plays out on the 15-minute time frame. So looking on the 15-minute time frame, oh, we have a little bit more zones over here now. Yeah, 15 minutes is getting complicated at this point. So I think what we need to do is we need to stick to the 30-minute time frame and really see where we're going to move. Because if we look at it from a buying perspective, I think the only thing I see with the buying perspective is if we break above 1922, then I think there's a very high probability for price to continue moving bullish, right? But in case if we don't break above that level and if we start to retrace and then break this low, I think then there's a very high probability for price to continue bearish. What's this? I would sell once it breaks the low. Yes, that's what I'm looking at here as well. So we look on the 1 hour time frame, we're bearish candle here. Yeah, it makes sense, right? We made a low, came up, and if we came up, I think there's a higher probability for price to continue down to retest this low. If we break above the high, then obviously we can continue moving up. We have a clean range going all the way up from 1925, going all the way up towards 1930. That's something we'll have to take a look at that point. So let's go over to the 30-minute time frame. Let's wait for the break of the low, and then we shall see what happens. Actually, you want the break of the low in the second half of the 30-minute candle. So you can see, right? Look at the time. This is very important for everyone trying to do the impulse entries. If you look at the time, this is 1 minute. Within 1 minute, when we're breaking the low, I don't think this is a good time to enter a sell because it's breaking the low in the very first minute, right? So it may break the low and continue back in the range. We don't know that, right? So we'll have to wait over here. Let's take a look at the news. So we have, ooh, look at that. We have CPI coming today. All right, they're looking at bad numbers. If CPI is looking for bad numbers, gold should be flying above 1922. So we're going to see what happens at that point. This is very interesting. We got some news. So for those people who don't know, oh wow, look at that retracement. So anyway, for those people who don't know what CPI is, CPI is a very, very high volume event at this time. So I think it's going to be much better to wait for CPI. And I think this is also going to be an opportunity for us to maybe trade the news. Yeah, maybe we can trade the news here because we still got some time left for CPI. Yeah, I think we can trade the news. Yeah, let's go ahead with trading the news over here. Because price is just going to range until CPI comes because they're looking at a, very different scenario here. Oh wow, you can see, look at that. 30-minute candle closed bullish. Look at the 1 hour. 1 hour still open at this point. 30 minutes bullish. We're creating a support over here. This is awesome. If price starts ranging before the news, it's going to be a very, very good opportunity for us to get some really nice trades. All right, this candle is about to close. How is it bullish? How is it bullish? It's not bullish. We're ranging here, right? We have a zone on the 1 hour time frame. If we break this zone, 1925, we can move up. But now we're creating a support on the 30-minute time frame. So if we break below, we can go down, right? So that's what we're waiting over here. Will we do buy stops, sell stops? I'm not sure. We're going to wait. We're going to wait till the news and then we're going to talk about buy stops and sell stops. Is the stream being saved? Yes. So this 1 hour candle is about to close in 3, 2, 1. There we go. 1 hour candle has closed. We look on the 1 hour time frame. 1 hour candle has closed like a doji candle. A doji candle basically means it was a write-off. A write-off is like the candle opened and closed at the same time. It really doesn't know what's going on, right? So we're going to stick to the 30-minute time frame and we're going to keep some things in mind over here. We're going to try to see if we do break the low of this 30-minute. Can we continue on to fill this wick and continue moving? No, I guess we're going to wait for the news over here. Let's wait for the news like good traders. Like good traders we are. You mentioned it being bullish. Man, I think some people don't listen correctly. Don't listen correctly at all. You have a resistance here. How can we take a fucking buy when we're below resistance? We can't take a buy when we're below resistance, right? We need to break above this 1925 area to continue moving bullish. If you're new to trading, you need to leave the stream right now. Please, if you're new to trading, you don't know what a pip is, you don't know how to calculate pips on gold, you need to just leave the stream and come back after a year when you have some more knowledge. Because this stream is not for you if you're really, really new. It's not going to work out that way, right? We can't take a buy when we're below a resistance, guys. We need to break this resistance and then continue moving up and then we can take a buy. Damn. All right, let's take a look at these rejections here before the news. Look at this. We got around 20 minutes left for NY Open and we look at the 30-minute time frame. This is a mess. This is a mess right over here in the 30-minute time. We can't do anything. We have CPI news coming in. Look at it moving. Yeah, I'm staying away from this volatility. Look how much volatile this thing is. Nasty. Just staying far, far, far away. The more volatile a time frame gets, it's a really good idea to look at the higher time frames here at this point. So if we look on the 1 hour time frame, we can see that the candle is nice. There's no problem over here. But if we look on the 30-minute time frame, it's a whole different world over here. Wicks, rejections, breaking the highs, breaking the lows. So it's going to be a better idea to stick to the 1 hour time frame and then just see what happens from this point. All right, this candle is about to close in 3, 2, 1. Perfect. Candle has closed at this point. So now, since we have news coming in, right? This is what we got to do at this point. This is what I'm thinking at this point since we have news coming in. I'm going to have a sell stop below the low of this 1 hour candle. Okay, before I talk about sell stops and buy stops, I want to explain one simple thing here for everybody. Right? This is what's going to be. We have whenever you have a downtrend, right? Or whenever you have an uptrend, what's going to be like, price is going to move up, it's going to make a high, it's going to come down, it's going to make a higher low, right? It's going to move up, it's going to make a higher high, come down to make a higher low, make another higher high, and then make another higher low, and so on and so forth, right? That's your trend. But if price breaks a higher low, that means the uptrend is broken, and now price can start to continue moving down at this point. So what did this correlate with candles? So when we look on the candles perspective, right? So if you look at the candles, right? So if you have a candle that's moving bullish, for the next candle to move bullish, you need the candle to break the high and create a new high. If you want the next candle to move up, you need the next candle to make another high and move up, right? But if you have a candle that breaks the low of the previous candle, then basically the uptrend is broken. So if you look at the same situation we explained right over here, you can see price moves up, makes a high, comes down, breaks the high, makes a higher high, comes down, moves up. So that's what we're looking at right over here, right? With news, if this candle breaks the low, there's a very high probability we're going to make a lower low, and with volume in CPI and volume in NY Open, we may continue moving down. But if this candle breaks the high over here with news, then there's a very high probability with news, volume, and NY Open, we can continue moving bullish. So that's what we're looking at over here. So we're going to wait for the news, and then we're going to execute on the news, and let's see if what we can do at that point. Right? Makes sense? Makes sense. But our target would be at 9:10, or our target would be at 9:30. So those are our two targets at this point. Let's take a look on the 30-minute time frame. Off topic, but how do you draw those red candles? Oh, that's a part of the zoom. That's a part of the zoom, basically. Oh wow, look at those rejections. Amazing rejections. This chat needs a moderator. I think this chat needs to end. That's what the chat needs. All right. Wow, look at that rejection, man. Crazy. Crazy rejection right there. 10 minutes before CPI. This is insane. Look at that. Oh. We're not taking any positions right now. What I'm going to do is I'm going to do a buy stop and sell stop before CPI, right? So again, let's look at the news. What's the news over here? CPI, they're expecting to have bad numbers. If the numbers are bad, that should mean gold's going to go up. But if the numbers are good, that should mean gold's going to go down. But we cannot really rely on these numbers. That's why I'm going to be putting a buy stop and a sell stop here. And let's see where we can go from this. On news, would you still wait for the close above or just impulse? Buy stops and sell stops mean impulse entries. All right, we got a minute left. We got a minute left over here, so we're going to put our sell stops. The sell stop is going to go below the 30-minute candle, which is around 27 pips away, right? So we're going to do pending orders. We're going to do 270 over here. We're going to use a one lot, right? Our stop loss is going to be, let's say, okay, so usually I don't use a stop, but I think in this case, let's take a look on the 1 hour. Yeah, but I think in this case, we will use a stop loss because we're doing simulation and price will move really fast. So I think we're going to use like around like a 30 pip stop, right? We're going to use a 30 pip stop over here. 30 pip stop. So we got a sell stop right over here. Now we're going to put a buy stop. Buy stop is going to be around 24 pips. 24 pips buy stop right there. Perfect. Perfect. Now we are in the money over here, right? We got the 1 hour candle. We have the news coming in, and let's see where this news event goes. All right, I'm pretty excited. Never done this on a simulation here. All right. Okay. 3, 2, 1. All right, news is out. Let's see what the results are. The results are, oh, even. The results are even, right? No change. It's no change over here. So our buy stops and sell stops are still in. Let's see what happens. Oh, we're moving up. Is the buy stop going to get activated? Actually, like, you know what? I'm going to remove the buy stop. And the only reason I'm going to remove the buy stop is because I was expecting price to continue pushing, but it didn't push. Because even if the buy stop gets activated, there's a range over here, and price didn't push as we expected it to push. Right? That's the only reason I removed the buy stops. The sell stop is below the 1 hour candle. It's still below this area. I'm going to keep that in because look at all this range over here. This is the only reason I removed the buy stop, because there's a lot of range at this point right over here. So the news was the same. Yeah, it's not very good at all. I mean, even looking at from a selling perspective, not good at all. Let's take a look on the 1 hour time frame. 1 hour is also bearish at this point. Actually, you know what we might want to do? We might want to take a sell below this area, 1917. When price comes below 1917, I think that's going to be a much better idea. Take a sell below 1917 because this is the break of the low on the 1 hour time frame, and then we have clean range going all the way down towards 1911. So I'm going to remove the sell stop here, and let's stop the price at 1917.650. Right, we're going to go over here, 1917.650. Perfect. That's where we want the price to stop. Look at that rejection, right? If the 1 hour candle is rejecting this area, and if we break the low here, I think there's a very, very good probability we're going to continue moving down. Let's take a look on the 1 hour, 4 hour time frame here as well. Yeah, 4 hours is not going to be fake out at that point. Let's take a look on back at the 1 hour time frame here. Yeah, I think it's going to be a nice move. Look at this 15-minute candle here, just rejecting that area. I wish we had the 5-minute time frame here. Actually, let's bring the 5-minute time frame here in a bit. Oh, we didn't break that low. We did not break that low. Are we going to break the low in the next 15-minute candle? Oh, there we go. We're breaking the low over here on the 15-minute time frame. Let's take a look at the 5-minute time frame. Now we're forced to bring in the backup, right? 5-minute is our backup over here. Look at that 5-minute just continuing to move down. This is the point. This is the point where you get no confirmations. We start breaking the low and then gold starts breaking down. These are those scenarios where it happens where you get no confirmations and your overall confidence and experience comes into place, right? So I'm going to execute a sell and I'm going to risk around 20 pips over here, move the stop back above this range. Let's do this, right? Around 22 pips. We take a sell at this point and really anticipate price to continue moving in this 1 hour time frame to continue down towards 1911. I think that's going to be a very good idea. Oh wow, look at that. Let's look at the 5-minute time frame. We're breaking straight down over here. 1 hour time frame, nice. We're up 10 pips, 9 pips. We're going to move into 15, 13 pips, and then what we're going to do is we're going to secure some positions. Okay, so we're coming into a 30-minute rejection area right over here to the left hand side, right? This is the rejection area we identified earlier. So at this point, what we're going to do is probably going to take some positions off the table, close partials, close 90%, and leave stops at break even at this point. Just a one lot, one lot on a $5,000 account on gold. All right, let's remove someone here from the gulag. Perfect. All right, look at that. Very nice. The 1 hour candle is about to close. We're about to close in about 15, 13 minutes simulation time. We're coming down. I think this is going to come down and fill this range over here 100%. The way it's moving, pumping, wow, crazy pumps there on gold. So if we break this though, oh damn, we filled this range here on this small 10-cent lot. All right, so we're going to close another 90% at this point. We're going to close like 80% over here. Close 80% and really leave the rest running. It's a very, very small position, so it is what it is. So we're going to leave that running over here. Wow, but if we do keep falling down, where are we headed over here? I thought gold went back to 2000. This is coming down. Interesting. This is 9 a.m. The start of the new 4 hour candle. We have a support here to the left hand side. If we break the support, then it is what it is, right? There's a guy in the gulag who is questioning how can this be live markets. We have a special connection with the liquidity provider, so we're using our contacts to simulate the live market at this point. So the liquidity provider dropped gold down to 1900s. So yeah, just joking. This is not real. This is a simulation. Oh man, gold is just falling and falling. So this is where we're just going to close everything at this point. So we look at the trade. Wow, this is running at 1,779 pips. The most pips I got on gold previously was like 120 pips. All right, so we're gonna close everything here. We got two trades. One trade we had a sell on gold. Second trade we had another sell on gold, just using one lots, right? We just used one lots over here, and we used 4% risk though. Yeah, but the idea is to really look at how price is moving. Is that simulator free for access? I think you need to go to this website and then you can find it out. You go to the website and you're going to find out if it's free to access or not. Perfect. Let's move on to the next day over here. We're going to move on to the next bar. Oh, hold on. What happened? Oh, it forwarded it by the week. Oh, we messed up. All right, no problem. Oh, it reset the whole thing. Oh, no. That's okay. So we're going to move on to Wednesday, right? We're going to move on to Wednesday. Yeah, it reset the whole thing. That's okay. So move on to Wednesday in New York session. This is going to be London Open right here. This is London Open. 3 a.m. Eastern, 4, 5, 6. This is 6 a.m. Eastern. Right over here. Let's take a look on the weekly here and let's see what's going on. So weekly is basically rejecting that same area. So if you remember, if you guys have been here for around, like almost like 45 minutes, you're going to notice that we had this rejection here previously, and weekly is basically rejecting that area here as well. Let's take a look on the daily. Daily is right here. Okay. So daily is also rejecting this area right here. There's no history on the trade you took. Yes, we messed up. I basically hit next chart. It erased everything, but it is what it is, So we're going to move on here. Okay, right. So daily also rejected level. We came down to possible like a support on the daily time frame. Looking on the 4-hour time frame, we're coming down. We're creating a support at this point. Looks like the 4 hours may be rejecting this area, like we rejected here to the left hand side around 1898, 1899. But we're not sure whether this is a move to continue down or whether this is a a liquidity grab for price to continue moving up. We don't know that yet. So let's take a look on the 1-hour time frame and let's see what's happening. Right, the 1 hour is basically creating a resistance right at 1899. Yeah, right at 1899. And if we extend it to the left hand side, what we're going to notice is that that resistance coincides with another resistance which was here previously. So if you see right over here, so now the idea is pretty simple. If we break above 1899, there's a very high probability we can continue on towards 1906, which is 80 pips away. Look to the left hand side, there was a support, so I think that's a very, very good move for price to continue moving bullish. At the same time, if we break the support, there's a very high probability we may continue down to the next support, which is almost like 38 pips away. We have a question here. Our bias was bullish, I think, during 2 trades, although opportunity comes as sell. How to overcome that bias? If you rewatch the whole recording, there was no such thing said in the first trade the bias was bullish, but the opportunity came in for a sell. So we got fluid and we executed on the sell. In the second trade, the bias was not bullish. In the second trade, we had news. So we based the trade based on the news. Right now, there's no bias. Right now, price is ranging on the higher time frame. You can see this range, like, candles are printing next to each other. It's ranging at this point. 4-hour time frame, we're ranging at this point. There's no bias. 1-hour time frame, we're creating a bias, right? So now at this point, we're creating a bias. And if we break above 1899, the bias is going to be bullish. But if we break below this minor support, 1894, then the bias is going to be bearish, right? Very simple. So let's take a look on the 30-minute time frame. Let's remove all analysis on the 30-minute time frame and let's do some fresh analysis here. So 30 minutes, same idea, break above 1899, bias is going to be bullish. Break below, I would say maybe break below this area here, because we have a lot of consolidation here to the left hand side. So I would want to see a break below 1890 for price to continue moving down towards 1884. So that's something I'd want to see at this point. So let's just see, do we really break above 1899 to continue moving bullish, or what happens here? Oh, what's this? you can get the trades back, click on the weekly, click next bar, then your trades come back, then click on daily and go back to Wednesday. Oh, I don't think that's going to work here. But it's okay. It's totally fine. We're going to continue on as it is over here. Okay. So let's see. Do we break above 1899 or do we start consolidating, or like, what kind of information do we get over here? Right. Let's take a look on the 1 hour time frame. Yeah, we would need a break above 1899 to basically go up, or a break below, 1894 to continue down. That's what we would need at this point. So you can see prices ranging. Even though this is a 45, 50 pip range, it's still perfectly fine. We're in this range over here. So we have to wait. If I'm in a trade and the candle becomes volatile, what should I do? Consider first it goes in my direction and breaks the top wick and then later breaks the previous low. I think at that point, you need to manage risk. That's it. If price goes in profits and it comes back down to your entry point, I close 50% at that point. Oh, look at that. We're about to break above this area. Guys, are you guys ready to take buys? We're about to break above this area over here. We're about to break above this area to take some buys. Well, probably not. What platform is this? The platform name is right over here at the bottom. All right, so we're about to close in 5 minutes, 6 minutes, 2 minutes, 1 minute. There we go. Candle closed. So now look at this, right? Really, really interesting. If the next candle breaks the high, this does not mean it's going to be a buy, right? The only reason why, because if we look at this okay, let me get my marker over here. So if we look at this candle closed below resistance. We have a resistance right over here. If we're only looking at it from a 1 hour perspective, we need the next candle to kind of like close something like this bullish candle so that we can take this buy on the next candle to continue moving bullish. That's what we want to see at that point. So we got to wait over here. Let's take a look on the 30-minute time frame here as well. Let's see what's going on. So 30-minute, yeah, I guess we can maybe take a buy on the 30-minute here as well, but we need this candle to really close bullish to take a buy. Unless that doesn't happen, we can't really take a buy over here. Because look at this, man, this clean range going all the way up over here. Clean range. 100 pip range. All right, look at that. The 30-minute candle has closed bullish. Now, the 30-minute candle has closed bullish. We're also moving into the New York Open. We're coming into a clean range here to the left-hand side. I think this is going to be, I think we can do some we can use dynamic risk to enter buys over here, right? So what we're gonna do is right now we are running what, 1 lots? Okay, this is really important. Right now we're running regular lot size is 1 lot. So what we're gonna do is we're gonna break this 1 lot down into 3 positions, right? So we're gonna use dynamic risk and break it down into 0.33 by 0.33 by 0.33. This is what we're going to do. So I'm going to attempt to do this, right? Because I think, we'll see. We'll see where we go from here. So this is what we're going to do. So we're going to use 0.33, our first position. So this is going to be a 30 pip stop over here, right? So we're going to take a buy over here. Now, remember, let's just move this stop loss down. So remember, we're using dynamic risk. Dynamic risk means that we cut down our entire position into 3 positions, right? And we're entering first one over here, right? So first one has already been entered. Let me just cross it out over here. So first one has already been entered. And now we're going to wait for more retracement. And if we get more retracement, I think we can enter second one. And then the third one, we're going to enter when we break above the high over here with the next candle or whatever, right? But till then, we're still managing our risk at this point. Oh, wow. I think the second one I may enter. Oh. Came so close. I would buy again now. Probably going to wait for the NY Open at this point. Wow, man. Came so close. Oh, God. All right, look at this. The 30-minute candle closed bearish. Let's take a look on the 1 hour candle. This is perfect. Look at the 1 hour candle. This is perfect for price to continue moving bullish. Absolutely perfect. The only thing we need is a retracement to enter the second position. And when we enter, okay, see right over here. Now, look at the stop of the first position. The first position has a stop loss of around 36 pips, right? So what we can do at this point is maybe bring this lower, a little bit lower, because if price comes down, the spread can take us out. So we got to be careful about that. Now, when we enter the second position is going to have a stop loss of 14 pips. So I think that's a pretty good idea right here, right? 145, right? Right over there, right? 14 pip stop. And now our third position, right? Our third position is going to go when we break above the highs of the 30-minute time frame. So even if we get stopped out over here, we're still well within our risk because the normal lot size we're using is a 1 lot, right? And we're at this point, we have less than 1 lot in the trade, which means we are still managing our risk at this point. So our third position is going to go when we break the high over this 30-minute candle, and then stops are going to go below this current 30-minute candle or 15-minute candle. We're going to see how that works. So we're going to stop the price at what? 1902.71. We're going to stop the price at 1902.71. Man, this is something new you guys told me about. I'm really liking this. Close, perfect. 1972.41. All right, this is the start of the new 15-minute candle. Price is breaking the high of the 30-minute time frame. We look at the 15-minute candle, right? Let's zoom in over here. Look at this. 15-minute candle is breaking the high. The 30-minute candle is breaking the high. We have clean candles to the left-hand side. Really good opportunity for price to go up. So at this point, we're going to add our third position in. And that third position, if we have a stop based on the 30-minute time frame, it's going to be around 37 pips. So we're going to put the stop below the 15-minute time frame, which is going to be only 22 pips, right? 22 right over here. And we're going to add the last position right here. Now we have our full risk in the trade, and we will modify the stop, bring it a little bit lower than the wick, accept it, and yeah, that's it. I think we can put our stops at break even on this one position. Actually, I think we can move all of our stop losses at this point, right? Yeah, there we go. Let's move all of our stop losses over here. Let's go to the 1 hour time frame, and yeah, that's it. I think we have clean candles to the left-hand side, and I think this is a very good opportunity for price to continue up towards 1906. We have clean candle to the left-hand side. I think this should work very, very well. So right now we're running 20 pips. Oh, right now look at that, really good return over here. Amazing, amazing return over here. Our first position is right here, so we're gonna take profits on this first position. Our rest ones are still running. We're coming up close to 1905, 1906. We're going to take profits on the second one. We're going to close partials on the last one. We're going to close 80%, put stops at break even, and let that position run at this point. Really good example of dynamic risk over here. Really, really, really good example of dynamic risk, right? This is, man, I've never used dynamic risk. Well, I have used, but after a long time I used dynamic risk here today. So you can see how candle broke the high. We're moving up over here. We got clean traffic to the left hand side. And as we know, gold will definitely tap 1910 at this point. Beautiful move. Man, gold has the ability to give you a really, really good returns, right? Really good returns. But if you overtrade gold, if you over risk gold, gold will really screw you over. Gold will be your worst enemy if you try to overtrade gold. Awesome. So we took 3 trades. Should have been up a lot, but it is what it is. So at this point, see this candle. This candle is forming. This candle should respect the low of the previous candle and continue moving up. If you guys remember the explanation I did about higher highs and higher lows based on trend in candles. Which pair of gold is this? How many pairs of gold do we have in the world? This question came from the Gulag by Ahmed Khan. Which pair of gold is this? Man. All right. Let's move on to the next session over here. Actually, let's forward this to 10 a.m. and let's see what happens. Do we have any news here? We have no news over here. So let's see how the 1 hour candles form and let's see where we actually go. Oh wow, we're moving bullish over here. Okay, so let's close all the trade. Let's close everything. We close all. And now we're going to do is, now we're going to move on to the next. Now we move on to the next session here, and we're going to see what happens on Thursday. Oh, take care, M. Shah. Thank you for joining. Really appreciate it. Okay. Oh wow, look at that rejection. See, look at this. Look how price is rejecting these levels on gold. So nice. We came up, we broke above this area, we have clean candles to the left hand side, and we went straight to that rejection area above around 1911, 1912, you know, and now we're rejecting this area. Now, normally when you're still trading, you're still looking at this price, you're still trying to take a trade, you're still trying to analyze the market, but look at the time. This is the afternoon session. In the afternoon, there is no reason you should be looking at the trades at this point. So now what we're going to do is we're going to move on to the next session over here. See, look, price is ranged over here. So this is London Open, 3 a.m. Eastern, right? And now we will go towards New York Open over here. This is 4 a.m., 5 a.m., 6 a.m. This is 6 a.m. Eastern. Raja, according to your Forex journey, what's the best risk you consider, static risk or dynamic risk? I personally like static risk because I can manage my trade, I can manage risk at that point. And to be honest, I really enjoying managing risk. I really enjoy, like, you know, to make sure I close with a lower loss than I anticipated. So that's why I like to use static risk. So this is the new session over here. Let's remove all analysis. Let's go towards the weekly time frame. So also remember, guys, we did not look at the 5-minute at all. You know, we only looked at the 15-minute, we looked at the 1 hour, we looked at the 30-minute. That's it. We didn't look at the 5-minute at all. This recording is going to be up on YouTube for about 1 week. So maybe you can, okay, so we're going to talk about that later. So weekly is basically rejecting this area, you know, as far the whole week we've been rejecting. The daily candle is pretty interesting, right? And the way the daily candle is interesting is because if we look at these daily candles, I think what we can identify over here is that not only we're making these zones, but it seems like we created a support down over here. And it also seems like that maybe this daily candle is trying to create a liquidity wick to maybe continue moving bullish. Can that be the case on daily candle? We don't know yet. So we'll have to investigate the 4-hour time frame to see what's going on. Also, let's take a look at the news here. Do we have any news? Oh, we have ADP over here. Oh, for CAD. For USD, we have nothing happening for USD. Okay, let's take a look on the 4-hour time frame here. All right, let's remove all analysis, remove this analysis on the 4-hour time frame. And so what's going on is we're basically creating a resistance on the 4-hour time frame. And it also seems like we tapped into some sort of a support on the 4-hour time frame here as well. You know, so let's take a look on the 1 hour and let's see what's going on. So on the 1 hour, we basically have this resistance at 1902. At the same time, we're tapping into some sort of a support here to the left-hand side as well, right? So we got a support over here. This may be a potential wick fill from break below 1894. So probably that's going to be another support right here. So we're going to clone these over to the 30-minute time frames. So here's what happens. When you select these zones, you'll see small squares appear on the side of these zones. So when these small squares appear, all you got to do is clone. You hit clone, you go to 30-minute time frame, and then it's going to show you right over here. So perfect. Oh, this seems like a fake out over here, right? Don't you guys think this is a fake out? If you can't see the fake out, let me explain it here to you. So this is what happened right here. We had support formed, right? Candle came down to support, candle closed above support. Next candle broke support, came down to support to the left hand side, and this next candle went back in the range, right? So when the next candle came down and went back in the range, this means this move down was a fake out. And whenever you have a fake out, this is how fake outs work, right? So you have range, price breaks down, comes back in the range. When it comes back in the range, there's a very high probability for price to kind of like wick down and then continue moving back up. That's what price does during a fake out. So that's what we're looking at this point. So maybe this move is a possible fake out over here. So we're going to take a look into that. Let's take a look at the 15-minute time frame. 15-minute time frame is also forming. It's kind of like a fake out here too, but it's like a minor resistances here as well. So we're going to wait to see what happens because I think this is some sort of a rejection area, right over here, because price rejected here before at 1897, and seems like price may be rejecting here again. So we got to be very cautious about this. Yeah, we got to be cautious about this area here, because if we do break above this zone, our range is pretty big, right? This is a, yeah, it's a 50 pip range, so we could get some 10, 20 pips out of it, out of this 50 pip range. So we got to wait up at this point here. Let's see how these candles form. Would you consider that engulfing candle too? This engulfing candle to what? Yeah, this is in a range over here now. The bullish candle? For what? Consider it for what? Okay, so look, this candle closed with a weak body, right? Bullish candle closed with a weak body. So this means there's low volume for price to continue going up, right? So there's no reason to take buys at this point unless we get a candle closing strong bullish candle, because a small body candle means that there's very, very low volume for price to go up. So we got to wait at this point. And also we're ranging at this point now. So you can see how, you know, candles close above this area, close above this area, and you can see how this is closing above this area. This new candle is about to close at this point now. We have 2 minutes left. There we go. This candle has closed. Let's take a look at the 1 hour time frame. Let's take a look on the 1 hour time frame here. 1 hour candles are closing doji, right? We have a doji candle close. Doji candle close means basically nothing happened. It's basically a write-off. So basically creating a rejection right over here, right? So yeah, we're just kind of like consolidating at this point. Let's go back to the 30-minute time frame. Yeah, we're just ranging over here now. There's no trade. We're just ranging. I mean, if we do break this area, we may continue down, but other than that, we're just ranging at this point. Nasty. The only clean range I see is this right over here. If I want to take a trade, that's going to be the only clean range I want to take a trade in, or we could possibly take a trade in this range right over here, because we have clean candles through the left hand side and we have clean candles through the left hand side in both situations, right? We have clean candles, and whenever we have clean candle, those are opportunities for very, very good trades. So we're gonna wait. This is a waiting game here today now. Waiting. The New York Open is about to start, and we're going to see if we break below this area to continue down, or do we break above this price here to continue up. We got 2 zones here marked now. So this, like, you know, this may very well be a no trade day here. You know, who knows? Look at this. We're coming back down to support. If we break it, we're going to continue moving down. But if we respect it, we're just going to range here. This is 77 pip range. Let's take a look on the 15-minute time frame. Yeah, wow, look at that. Ugly. So bad. So bad. There's nothing pretty about this area over here. So basically that wasn't a fake out. Well, now it wasn't a fake out. But at the time when we saw it, it seemed like a fake out. But now it's not a fake out. Yeah, so we're just waiting over here. Nothing's really happening at this point. So at this point, we say, okay, guys, well, nothing really happened. Thank you for coming in. Thank you for joining the stream. And as soon as we leave the stream, there's a price that goes all the way up, you know, or goes all the way down. And we're like, oh, it had to happen after we left the stream. But yeah, we're going to wait over here and see what happens, right? We're still ranging. And look at this. Look at this, right? The bigger the range, the bigger the breakout, right? The bigger the range, the bigger the breakout. So that's what we're going to wait for over here. We're going to see, oh, wow, look at that, man. This is the start of the new 4-hour candle. And if you look at the 4-hour candle, let's look at it in more detail here on the 4-hour candle. The 4-hour candle is basically where this candle formed bearish, this candle formed bullish, respecting support, this candle formed bearish. We had another bullish candle closing with a huge rejection to the bottom side. And look at what happened here, right? Look on the higher time frame here. Look what happened. We had candle come down, candle come down. This candle did a huge rejection, went straight back up. right? And what's happening currently right now? Currently, when we look at the candles, we see the previous 4-hour candle, it did a huge rejection and it closed back above this area just like it did before. So if we break above those minor resistances on the 1-hour time frame, which I will show you in 2 seconds, right over here, I think there's a very good probability we're going to continue up towards 1902 in this 50, 60 pip range over here. So we're going to wait for those confirmations on the 30-minute time frame, 15-minute time frame, and then we're going to see if we can take those trades. Oh, look at that. We're moving up with a lot of volume. Yeah, this is really high volatility. I'm not going to mess around with this. I don't want to destroy my gains. I thought we were breaking up, but look at this. This is only 8 minutes past over here. It's a good thing to wait. Great time to have a sip of my green tea. Wow, so much volatility over here in gold. Crazy. This candle is about to close. New York Stock Exchange is about to open. NYSE is about to open right now. Oh, look at that. NYSE open over here. Are we breaking down? Are we breaking up? Like gold? What are you doing? Are we breaking hearts here today? You know what I'm thinking at this point? What else I'm thinking? I think a lot of things. So this one thing I'm really thinking over here is that, okay, take a look at this, right? This may be a little bit complicated for some people, but I'm still going to talk about it. So what I'm thinking over here is that if this can, so since this is NYSE open, right? And we all know that New York Stock Exchange open has a lot of volume. Oh, nice, Luke. You said it right over here. Buy is above once it breaks, right? Perfect. So what I'm thinking over here is that if this candle breaks the high of the previous candle, respecting the low of the previous candle, this means there's a very high probability for price to continue moving bullish. Does that make sense? Because what does a bullish trend looks like? A bullish trend makes a higher highs and higher lows, right? So if this candle respects the low, which means it's making a higher low over here, and it breaks the high, which means it's going to make a higher high, that means there's a very good probability for price to continue moving bullish, right? The plan is set, idea is set. So, and at the same time, if it breaks the low over here, then there's a high probability for it to continue moving bearish, right? So it goes hand in hand. So that's what we're going to wait on over here now. So we're going to stop the price around, what's this? 1898, 1818? 1818. Let's do this. 1898. 1898.18. All right. So let's see if the price really stops there or not. We have about 20 minutes left for this candle to close. Oh, hey man, price doesn't stop at that point. Who told me price stops? It just kept on running. It just kept on blasting through that area. Yeah, I don't think it's stopping over here. Let's take a look at the smaller time frame if we have any confirmation to enter. Yeah, I don't think we have any confirmation to enter. I mean, just take I don't know, let's wait for the 5-minute candle to close and then we're going to enter. But if not, then it is what it is. Because if the 5-minute candle, yeah, there we go. The 5-minute candle has closed. If we break the high on the 5-minute candle, I think we can continue moving bullish. But I don't want to take, oh wow, oh man. Yeah, good thing I didn't enter this trade. I'm going to wait over here. Wow, look at that rejection. Wow, crazy. Look at that gold. Came down, retest, tapped some EMAs, and boom, straight up. Oh, and then straight down. Holy, 40 pip move down. Crazy. Oh, this thing closed back in the range. Oh, bro, I thought this was going to continue moving bullish. Wow. Damn, Daniel. This is some crazy, crazy somersault on gold. Gold literally did a somersault over here, and no trade was taken over here. Damn, we're still arranging. Now I want to know where we're going to break. We have one more session left here, the Friday session, and I kind of want to know where are we going to break here. This is really interesting now. Look at this, 15 minute came right back down. Yeah, I really want to know where we're going to break here. All right, this 30-minute candle is about to close. Are we going to break down? Are we going to break up? Oh, looks like the 30-minute candle, it may close above this zone again. And if you get it close above the zone, I think we can continue breaking up. So let's see what happens. Where would you put a buy stop in this? No buy stop. Why are we going to use a buy stop? There's no buy stop at this time. Yeah, at this time I'm done for the day. I'm not even looking at the charts after this. You know, it's just been ranging. Let's yeah, let's put buy stops here. Let's try to put buy stops here. Right? Oh, what happened here? Okay. So the way I may want to put a buy stop here, since there's going to be a breakout in any direction, I may want to put a buy stop above the 1 hour candle or below the 1 hour candle, just like we did in the news, right? Because if we're ranging here, we're going to break one way, right? So let's put a buy stop at, 1898.83. So we're going to use a lower lot over here. We're going to use the 0.2 lot over here because, putting a pretty big buy stop. So this buy stop is going to be around 25 pips away. 253 pips away. The stop is going to be around the same. Let's do like a 30 pip stop over here. Are we over trading now? No, we didn't take a trade today. So this is a small risk, minor risk buy stop we're putting right over here, buy stop above there, and we're going to put a sell stop below the low of this 1 hour candle around 37 pips away. 37 pips away, and we got a sell stop right there. Oh, this is not right. Let's change this. Buy stop, sell stop, modify. Let's bring this down over here. Accept. Awesome. And we also got to modify the stop loss. Actually, that's okay. So we're going to leave it running here. Let's see what happens. Let's take a look at the time. This candle is about to close. Very, very soon, this candle is going to close. Let's call it a day. Volatile market. Ooh, buy stop got activated. Buy stop got activated. We're moving up over here. We're coming in drawdown at this point. I think if we're moving up, we should fill the Victor left inside right over here, around 1902. Okay, at this point, I'm going to remove my sell stop and I'm going to put stops at break even here because, this is a trade I would normally never take. And just going to put stops at break even. If you get stopped out, we get stopped out. But if we continue moving bullish, we get some gains. That's still pretty good. And then we're going to move on to the next session here. All right, we got stopped out. Let's move on to the next session here. I'm way past my time of trading over here. Way, way, way past my time of trading over here. Oh, okay, yeah, we did move up over here. Okay, awesome. Let's move on towards the next, the last session over here. So we're going to move on to, so this is the London Open here, right? London Open, 3 a.m. Eastern, 3, going to 4, 5, 6. 6 a.m. Eastern, right? So what we're going to do is we're going to go towards the weekly time frame. Weekly is still bearish. We're still rejecting that area. Looking at the daily time frame. Oh, look at that. Right? Didn't we talk about the daily candle may move bullish? It did actually move bullish over here, right? But it also closed with no wick on the top. And this new daily candle basically tapped into some sort of a resistance here to the left hand side and kind of like rejected that area. So we got to identify that on the 4-hour time frame and let's see what's happening, right? So we're going to break this 4-hour down towards 1 hour and 30-minute full margin, 90% risk for the last trade. Yes, let's do that. So we're going to do a last full margin trade here, but we got to be very careful. We got to be very careful not to blow the whole account because, all right, let's take a look on the 4-hour over here. 4-hour is basically ranging at this point. We're creating a resistance right over here. We're creating a support right over here on the 4-hour time frame. Seems like the 4-hour candles also tapped into another liquidity area down at 1902. So we don't know what's happening at that point. Let's take a look on the 1-hour time frame here. So let's remove all analysis on the 1-hour time frame. And the first thing we can identify is that we have a resistance right here. And the second thing we can identify is that we have a support right down over here. So now we got to go to the 30-minute time frame because this is a range. Right? Now, if we break above this range, if we break above this range, we may continue up to fill this wick, which is 26 pips, right? If we break above this wick, then we have a bigger range to fill, which is all the way up at, 1920, 1919, and this is pretty far away too. This is like almost 100 pips away, right? So we got our buy target set right up over there. If we break below this support, right? If we break below the support, I think price can maybe continue down to this area, which is almost like 30 pips away, 20 pips away. Let's measure this area right over here. So this is around, 30 pips away. Not that bad, pretty good. Let's take a look on the 30-minute time frame. 30 minutes also ranging. So at this point, we're just drawing our zones over here to see where price can go if we kind of like break or like, whatever that may happen over here. Yeah, we're just ranging at this point. If we do come down, our range is not enough, 30 pips. Yeah, I guess we're going to wait at this point. We're going to wait to see what happens. Because if we do break the low or if we break the high, I think there's a very high probability we may continue moving bullish. And that's something we're going to look for right over here. See this? See this area here? If we break above this resistance, there's a very high probability we can continue moving bullish at that time. So we have to keep that in mind over here. Let's take a look on the 1 hour time frame here. Yeah, the 1 hour candles are also kind of like ranging here. We're consolidating. We're not sure what's going to happen with the next candle, so we got to wait. We have to wait a break of this resistance for price to continue moving bullish. So let's see what happens. Oh wow, straight rejection over there. Looking at the 30-minute time frame, we're also rejecting, but at the same time, we've created a very good opportunity for us to take some buys if price does continue breaking up. Right? So we need a 30-minute candle to close above this area. Yeah, we need a 30-minute candle to close above this area. Because previously we've had candle reject this area, so we're not sure whether this candle is going to reject this area or break above it until and unless this candle actually closes above this area. So we got to wait, right? Look at that. 30-minute candle closed back below that range. So we got to be very careful over here. We got to be extremely careful here, man. Extremely careful. The 1 hour candle is also closed. Let's take a look on the 1 hour candle. Look at that 1 hour candle, man. Amazing, amazing, amazing close over here. We close bullish. This candle, we're not sure what's going to do. Looking at a 30-minute candle, we need a candle to close bullish and for the next candle to continue moving up. But before we do that, let's take a look at the news here. Oh, we have retail sales data here coming on. Awesome. We have retail sales data coming on for gold. So I think we have another opportunity to trade gold. Perfect. Looks pretty bullish over here if you ask me. Right, so we want this 30-minute candle to close over here bullish so the next one can continue moving up. Yeah, we want this candle to close bullish right before the news. We have about 10 simulation minutes left. Man, this thing is running up over here. And I guess we're going to try to do some buy stops and sell stops here as well. All right, so this is the news. The news is here. Let's move back a 30-minute candle. We're going to go over here and we're going to move back. Oh, okay, perfect. So I think having a sell stop at like 1908 would be a very good idea for price to continue moving down. That's what we're going to do over here. So we're going to put a sell stop below this 30-minute candle because if we break the low, I think we should continue moving down, right? It's going to be around 21 pips. Right over here. Oh, let's do this over here. 21 pips. We're going to use 1%. Actually, let's use 2% risk, right? Our stop is going to be around, let's have like a same stop loss over here. 270 stop loss. We're going to have a sell stop right there. And buy stop, I don't know, man. Buy stop is way above this wick, is way too far away. It's like 40 pips away. I'm not even sure if we're going to hit that buy stop or not. But anyway, we're going to have a buy stop there, whatever. If we hit it, we hit it. And yeah, that's it. The news is here. Let's take a look at, oh, nice. Look at that. We're moving down. We're moving back up. This does not look too good. We have a high risk in this trade over here. Okay, we're coming down. Let's put stops at break even. I don't like this at all, the way it's moving. Oh, it got stopped out. Gold is dangerous. Yes, way more dangerous over here. If you press visual mode, it's much easier to execute buy, sell, stop limits. Oh, okay. Never really used visual mode, to be honest. So, okay, we did actually move down. Let's see what the result was here on gold. Result was good. Good retail sales. Nice. Good retail sales. So now, here's what's happening, right? Retail sales data came good, right? We have good retail sales data, so that means gold should continue breaking down. Let's take a look at that on the 4-hour time frame, right? So looking at this 4-hour candle, this new 4-hour candle just started. I think there's a very high probability we can continue breaking below 1902 and really continue down towards, 1890s and stuff like that, because the retail sales data came out really, really good. And whenever you have news come in, news will take some time to get absorbed into the market, right? Closer to NYSE open and stuff like that. So we're going to keep that in mind for sells. And I think a last trade is going to be somewhere below 1902, 1903. That's where we're going to execute our last trade here today. Yeah, I think that's going to be a pretty good idea. Kind of like break below 1902, 1903. We're going to execute our last trade, and then we're going to call it a day. Guys, FTMO versus Finding Talent. Oh, let's remove the buy stop. Why do we have that buy stop still on? All right, perfect. We're coming down. This candle is about to close. 1-hour candle is about to close over here. Oh, wow, look at that. We're about to break below 1903 over here at this point. Let's see where this candle closes. We got about 12 minutes left, 11 minutes left, 10 minutes left for this candle to close. We're rejecting. We still haven't broken below this area. We haven't really broken above this area here either. So we're waiting. We're waiting. Look how volatile gold is. It's really, really important to wait. All right, there we go. Candle has closed. Let's clone these objects on the 1-hour time frame. Obviously, we're looking at break below. Let's remove all these analyses here first. Remove this, remove this, remove this. Go to the 30-minute time frame, and we're going to add these zones onto the 1-hour time frame, just like this, right here, right? So we need a break below this wick 1902 for price to continue moving down. That's what we want to see at that point. So let's see here, because the retail sales data was high, and I think if the retail sales data was high, that should really push price down, even though it's ranging at this point. Let's take a look on the daily time frame. Daily is rejecting, candle close window wick, 4 hours ranging. Yeah, I mean, if you do get this break in this hour, the London close hour, I've taken trades before in London close, and London close has a lot of volume. So we'll see if we're going to break this area or not. So far, we're just ranging here. Nasty ranges, man. Nasty ranges mean big breaks. So that's what we're waiting for at this point. This candle is about to close. The 30-minute candle is closing. 30-minute candle is coming down. Oh, look at that. 30-minute candle closed. Weak bearish candle. The new 30-minute candle has started at this point. Oh, uh-oh. We're breaking below the lows. We got to come below 1902.50. Closer and closer. We're coming down. The 5-minute candle is also about to close. Let's see here if we can execute on the 5-minute time frame. All right, the 5-minute candle has closed. Let's take a look on the 5-minute time frame. Oh, wow, look at that. We have some massive, massive candles forming at this point. Looking at the 15-minute time frame, we're coming down. We haven't really broken below this. Yeah, I think we're going to execute a sell right over here. Looking at the 5-minute time frame. Let's zoom in here a little bit. We're going to execute a sell. We're going to put our stops back above this 5-minute candle, which is like 27 pips. We're going to use, let's use 1% risk because it's a 5-minute, right? So we don't want to use a bigger risk over here. No full margin here today. What if the same candle breaks the low, but the candle doesn't have the top wick? Then that means there's a lot of bearish volume at that point. You wouldn't take the trade at 1904. You wanted to break that zone. 1904, no, because this is our support right over here, right? Even when you look to the left-hand side, you had rejection, rejection, rejection. So 1904, doesn't really make any sense because because below this area we have clean traffic to the left hand side. That's what we're counting on over here, and we're counting on the next 5-minute candle to just start plummeting down over here, just like it does in the live streams. Oh wow, I don't like that retracement at all. Oh, now we've made a low at this point, right? Since candle closed bullish, we made a low. I'm going to close 50% of my position. And the reason I'm going to close 50% of my position is because I'm reducing my risk, right? So this is our opportunity to kind of reduce our risk in this trade. But if we start breaking this low here again, then we can add that risk back. So we're going to add the risk back once we start breaking the low here again. Oh, there we go. We've broken the low at this point. So we're going to add that risk back that we took off. And then that's it. We're coming close to the hour, and this close to the hour should continue driving price down at this point. Oh, nice. Look at that move. Retail sales data came in hot. Super hot here. Let's take a look at this trade over here. We're running at 20 pips, 15 pips. Pretty nice. How far did it move actually? It moved like 32, 35 pips at this point. So put stops at break even and let this trade run. All right, we're about 14 pips, 16 pips. Going to take profits on this one position and leave the other trade running at this point. So what happened over here was that candle closed against us, so we managed our risk. We took some risk off, and then we added the risk back again. And we can see now, like, we are where we are, and price basically just range here because it's Friday at this point now. Nothing to do, price is ranged over here. So thank you everyone for joining here today. I hope this was educational. You can rewatch this 4 or 5 times to really understand certain things. One really important thing we did here today was we did dynamic risk. Right, we added dynamic risk, and that dynamic risk really played out really well. So that's something very important to go over and learn. Gold is very volatile. It's very dangerous. So I would say just relax on gold. I've also been getting a lot of questions on whether the new intake is for the current members or not. Current members, you're already involved in this. You don't have to pay for anything. It's completely free. There's no reason for that. If someone wants to do an intake, if you're not a part of this, our mentorship, the link is in the description, whatever. And have a great weekend, everyone. We'll see you guys on Monday morning. Take care. Now I've got to figure out how to close.